For several weeks, I've been reporting data that shows the housing market growing in 2024. Those metrics, specifically the pace of new listings and the pace of new sales contracts, slowed this week. Our immediate sales metric of the homes that get offers within just a couple days of listing also slowed this week. New listings and new contracts both still show some improvement over 2023, but the growth rates have slid back down. Two things happened in the last week or two that may have contributed. Mortgage rates have risen back up to 6.9%, and the country was in a deep freeze. So that could delay a few listings and a few offers for sure. Or maybe both of those things together cause the market to tap the brakes. Either could reverse at any moment, or they could turn for the worse. It is always dangerous to blame the weather, of course, for any economic slowdown, but a quick look at the state level data, it shows that in general, the coastal real estate markets continued the trends of the last several weeks, but much of the Midwest, for example, did not. California escaped the deep freeze last week, and the housing market seems to have stayed on the recent pattern with new listings growth and with continued sales growth. The state of California had 20% more contracts started last week than the same week a year ago. So the momentum slowed a bit across the country. And if this persists, though, my optimism for continued market recovery will have to change. That's why at Altos Research, we track every home for sale in the country every week. We track all the pricing, all the supply and demand, all the changes in that data, and make it available to you before you see it in the traditional channels. I'm Mike Simonsen. I'm the founder of Altos Research, and let's look at the details of the U.S. real estate market for the middle of January 2024. The available inventory of unsold single-family homes has been increasing compared to a year ago. Because of the pace of the new listings slowed this week, inventory growth slowed. There are 506,000 single-family homes unsold on the market now. That's up just a few hundred homes from last week. It's 7% greater, more than 7% greater than last year at this time. In this chart, each line is a year, and the 2024 line is started at the left end of the chart. It's tracking above last year with the gap growing each week. That's why I've been optimistic for greater selection this year for buyers. Rising mortgage rates leads to rising inventory levels. And while rates are down from the peak of November, they have been rising pretty steadily for a month, and they're certainly higher than last year at this time. So I suspect there are a lot of home buyers who are happy to pause making offers when rates tick up. They prefer to jump in when rates move down. In most recent years, available inventory ticks down the last week of January. This is part of the spring market cycle, normal spring market cycle. And you can see in each line here, last year, each year of the pandemic, there's a dip at the end of January. More buyers, fewer listings, inventory falls. But even in the pre-pandemic years, 2017, 18, 19, at the top of the chart, when we used to have like 800,000 homes on the market, you'd still see that dip at the end of January. So our inventory forecast model expects inventory to fall next week. And in the data we report next week, it'll be really interesting to see if that happens or if we get inventory gains, which is growth that we've been seeing all for the last several months. That's that momentum. You can see the momentum in the new listings growth is what slowed this week. So 54,000 new single-family homes listings, of which almost 10,000 were immediate sales. So those are the ones that take offers, they get listed and they take offers immediately, and so they're no longer in the active market. So the total new listings is just 2% more than the same week a year ago. I find this a little disappointing because I'm of the view that more sellers and more inventory will help everyone in the market. More liquidity, more selection for buyers, more transaction, and less upward pressure on prices. In this chart, each line is a year again, and it really shows, the light red line really shows how few sellers we had all year long in 2023. Since the middle of November, though, we've finally seen some sellers inch back into the market. Recently, some weeks have had as many as 10% more new listings than the same week a year previous. That's not a lot of growth, but it is showing signs of growth. And I've been hoping that trend would continue. But this week, that growth fell down to just 2% more than a year ago. So 10% growth slowed to 2% this week. Maybe that's deep freeze that gripped much of the country. The gray lines in this chart are the previous years, and you can use that for context. And the thing that you see in the context is that there's no sign we're going to have a ton of inventory this year. That we're still far below the recent levels of sellers. However, we're showing a little bit more inventory all year long than we had in last year's light red line. So this is going to be especially, I expect inventory to grow all spring, and that'll be especially notable if rates stay in the upper sixes or move back into the sevens. Today, rates are 6.9% higher than they were a month ago. And in general, higher rates means more inventory. The pace of sales is also above last year, but just barely this week. The sales rate has been growing off the very low levels of 2023. But this week, that growth rate really kind of stalled. So there are 262,000 single-family homes in contract right now. That's up 4.6% from last week. It's January. And it is 5.4% more homes than a year ago. 5% more homes are in contract now than there were at the end of January 2023. There were 50,000 new contracts started this week. And when this is where you see the slowdown for week to week. 50,000 new pendings is only up 1.4% from last year. So that's the weakest annual growth of new contracts in over a month. And like I said, I suspect it's weather related, but it's definitely what I'm watching next week and really closely all spring long to see if the expected growth in home sales materializes. In this chart, each bar is a week with the total count of homes in contract across the U.S. The taller the bar, the more homes that we have contract pending. The light portion of the bar, new pendings, new contracts each week. And this week's reading at the far right end of the chart, see it climbing in January. So we've highlighted where we are now at 262,000 single-family homes. There's a line across the chart to compare to just 249,000 last year at this time. It was very, very low, so 5% more homes in contract right now. The sales volume will keep climbing for the next few months as it happens with spring. I'm still holding the view that the sales will continue to grow above last year, and you can be sure we're going to revisit this data each week to see if it starts turning to prove me wrong. Even if a few new listings and offers get delayed because of the cold, for example, or because mortgage rates jumped up, home prices they're on a less volatile curve. A median price of single-family homes in the U.S. is $420,000 again this week. That's a few percent higher than last year. It's unchanged from last week. Home prices are on track to post a new all-time high in May. The price of the new listings, the median price of the new listings this week is $399,000. That's up a couple percent from last week and is 5% higher than last year at this time. So those are mildly bullish leading indicators for home prices for the rest of the spring. It is fascinating to watch. Some folks still insist that home prices are falling or that they will crash in 2024. I'm always on the lookout for signals of home price corrections, always. And there are always variables that could bring home prices lower in 2024. For example, mortgage rates could jump over 8% again. Consumers are very sensitive, so if rates jump, you'll see abrupt purchase declines, and we will see the home prices adjust very quickly to the lower level of demand. And so while this could happen, I don't predict mortgage rates. They could jump. They could come down. It could happen. It is important to recognize that at this moment, there is nothing in the data that indicates home prices will fall this year. Buyers are here for the current supply at the current prices at the current mortgage rates. So keep that in mind. Keep also in mind that the homes that get listed in January and take offers in February. Those deals close in March and April. So we already have visibility for home prices for a big chunk of the year. In fact, the more credible risk for 2024 is really upside risk, the risk that demand jumps and home prices get pushed higher. So if rates fall into the fives, as many predict, that'll be a big demand stimulus. And so inventory will fall and competition would push prices higher. Price reductions are another way to watch this. There are only 31.4% of the homes on the market that have felt the need to cut their asking price. That's in the normal range and is improving each week. Each week, of course, we have fresh spring inventory. We have enough buyers that the current crop of sellers doesn't feel compelled to cut their asking prices. And so mortgage rates have been climbing for a month. And if they continue to climb, at some point, buyers will slow. And the sellers will notice. So what is that threshold? If rates jump back over 7%, I think you will see buyers and sellers react, and you'll see it in this data here. We still have fresh inventory this spring, but you can see, for example, mortgage rate jumps in this chart. You can see that the price reductions adjust very quickly in the price reductions data. In 2022, rates were in 2022 rates were climbing from the threes, and you can see the light red line. The price cuts kick in starting way back in March, and the dramatic showdown. By April, the slowdown in buyer demand with spiking mortgage rates was very notable by April of 2022. You can see the spike in the September price reductions in each of the last 2 years, 22 and 23. If buyers are lucky, mortgage rates will resume a slide down. And you can actually also see how quickly falling mortgage rates spur demand when you look at the price cuts data also. In 2020, that's the sort of black line here. That's when you can see buyers jumped in when rates fell so fast in the spring of 2020. So on the other hand, staying in the mid to low sixes seems like we will have plenty of demand for this spring, for home buyers this spring, but not overheating. And if you're interested in a sustainably improving housing market, then rates staying stable in the sixes might be the best scenario. It can be hard to communicate this with buyers and sellers. There are folks on the sidelines waiting for rates to drop so that they can swoop in for the sudden bargains. They may not realize that how much competition is waiting right alongside them. If you need to help buyers and sellers see the actual data, you should join us at Altos Research. People need help understanding the fast-changing market, and they need to hear it from you. So go to altosresearch.com, book a free consult with our team. We'll help you know how to talk about the market with your clients and prospects today. There's a link in the description below. Click that to join us. Let's get started. Thanks, everybody.